Good afternoon and welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at MarketSite is Navneet Munot. He's a CFA, Chief Investment Officer of SBI Funds Management Private Limited. And we're going to focus on global investors keeping the faith in India. Navneet, thank you so much for joining us at MarketSite today. And that really is a question. Should global investors keep the faith in India? And what are some of the structural growth drivers?
Well, absolutely. I think over the longer period, those investors who kept the faith in India have been rewarded very well. And I think over the next several years, the growth momentum is likely to continue. Over the last 25 years, India has grown at the nominal GDP at 13%. Corporate profits have grown at 14%. Market capitalization has grown at 15%. And I don't see any reason, given the structural factors, that next 25 years are going to be any different.
Well, what are some of the near-term challenges?
So structural factors include all the opportunities in consumption, the opportunities in infrastructure building and all. The near-term challenges may come from outside India, which is like the oil price increase. The crude oil prices have gone up. We being one of the largest importers, 1.5 billion barrels a year, that impacts India's current account, that impacts India's overall foreign exchange reserves, that impacts a lot of other macro variables. The other could be the size of NPAs in the bank's balance sheet. So of course the resolution process is underway, but that may take some time, and that could impact the overall investment cycle recovery.
Well, you had mentioned that there has been really strong growth over the past 10-15 years. If you have been invested in India, let's talk about the earnings trajectory and valuations. Do you think they're rich here, or there's still more room for growth?
So India participated in the global equity market momentum over the last few years, but the equity valuations have moved up. Earnings have not kept pace at that level, at the aggregate level. Of course, there are pockets of corporate India which have delivered very good returns in terms of the corporate profit growth, but a large number of sectors haven't delivered, particularly the banks who had to provide for the non-performing assets. They have dragged down the overall aggregate profits. But I think with the cyclical recovery, with the policy reforms that have been undertaken over the last few years, and with the global recovery over the next few years, corporate profit growth should get back to the long-term trajectory.
So where are the opportunities for global investors? If they haven't participated in that run-up, can they still get involved here?
I think it's still, India is a structural long-term story. It's a $2,000 per capita income, 1.35 billion people, large middle class, which is aspirational in nature now. The penetration of almost every single thing that you talk about is at a very early stage of evolution. So there is a long way to go. The country needs a lot more infrastructure, which is getting built. Then you have a lot of opportunities in the offshoring, where India has made its mark.
All right. Well, thank you very much for joining us, Navneet, at MarketSite. And thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.